Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, July 8th, 2013. This is brought to you by Triton Wave Consulting, a company I own that has early warning market timing indicators used all over the world in all time frames and in all markets. And tonight I will be including gold in the discussion. All right, well, I hope you all had a great 4th of July holiday. It was great fun, great weather in Dallas, and it's rare that July 4th has an evening temperature of 75 degrees in Dallas, so it was wonderful. Okay, let's take a look and see what happened with the S&P. In the last 5 days, this hash mark right here, this candle is where it ended last week. It went sideways a little bit, and then it started migrating up. Okay, so now with the beginning of today, it's 7:30 on Sunday evening on July 7th, and this is the market outlook for this week beginning Monday, July 8th. And it looks like we're already up 425 points. 7:30 Central Time, and it looks to me like this is making this okay. You see where the 8 and the 21 crossed, so that's a bad sign for bears. You see where the 8 crossed back over the 55. That's a bad sign for bears. Okay, you see where this is below zero on T1. This is below zero on T2, and since our last discussion, it was down two hash marks as of last Sunday. Now it's down 8 hash marks. That's a good sign for bears. So we're kind of caught in the crosshairs here. One nice thing is that there is a downward ceiling right here that has not yet been penetrated. The way I look at it is, since this is since T1 through T3 is below zero, and those are the trading waves, this giant move down here, which netted about 40 to 50 points last week, we've seen 2/3 of that retrace already. So the big move, if this continues up, then it's going to hit back up here at 650, right into that area. Okay, if this holds right here, then we're going back down again. So I am not a bull on this until this goes above zero. So I will keep looking for plays to the downside. I still am bearish on this. I think that Monday or Tuesday is going to be the definition of whether we head higher, and we may actually be there by Tuesday, and then higher again, or whether it's just going to come here and do a key reversal on Tuesday and then come back down and start hitting these exponential moving averages back here, here, and here. So we'll see, because this line of demarcation that comes down here brings us all the way back to 1500 on the S&P. All right, let's look at this in a shorter term time frame, like on the 1597 tick chart. And basically, if you are a day trader, or you can use these actually for swing trading. Start with here being down. You would have taken some heat, but you would have captured this all the way down to here. And then you ride this on the upside. This is on down. You ride this up. You cover when this goes below zero, and you're back in when this goes up. Now the reason why you don't play this on the downside unless you're using a 144 tick chart is because T5 and T4 and T3, which are the anchor charts, are above 0. So if you're playing this, you would have caught this, and this is good for, you know, like 10 or 15 points. All right. Let's look at, I am going to look at gold tonight also. Where's gold? Gold, where are you? Spot plus electronic. Okay, wrong one. Electronic only. Here we go. Okay, this week I'm saying we, I mean my clients, had a couple nice moves in the past couple of weeks. We had a couple nice moves in gold. I think in July 7th, I think we have like up to 40 points now. We caught about 20 points of this, and we caught about 20 points of that. Once one guy caught 40 points, really lucky, and about 20 to 25 points on that one. So I still like gold to the downside ultimately, but it looks like it's had a range tonight of let me see, 1229 to 1216. So it's like a 13 point range. It's currently up 12. It's 1219. It's up $7. And I'm relying on the waves. Basically, long term, I'm looking down. Just look at all these waves on the daily. Okay, on the weekly, let's look at this. Actually, let me move over to the electronic version on this one. That has more information. All right, so we're kind of dangling around the 1220 area, and right now it is actually selling for 1220. So whether it breaks down, this is what I do for my clients is if it breaks, I know from shorter term values whether it's going to hold this or break down below it. I'm sorry, whether it's going to break down below it or hold this across and then break up to the 8 period exponential moving average, or to the I'm sorry, that's not the 8. That's the 377, and this is the 233. And basically everything's possible because it's had such a huge monster move to the downside, you know, since November. October, November, that eventually it may come down to this, but if you're a trader, then you like trading stuff. So let's go back to the daily, see where we are. Let me see, move back to the electronic session. Now I'm not sure whether this is going to hold or not, and I'll show you why in a minute. If we look at the 21, the 21 is already saying, okay, this has already happened today since we opened. This is like this line right here where the cursor is 5 o'clock Central Time when it opened back up. It spiked about 20 points, and then it spiked down. And whether it goes up or down or not, it looks like it wants to go on the 21 Globex price. It looks like it wants to head back up. I'm not sure, so let's look at a smaller wave, which is, we'll take a look at the 1597, and let's just take a look at this on the 1597. All right, on the 1597, we have on the shorter waves. Okay, T3 is going up here. Now, how do you know that this isn't just going to like right here? How do you know this when T3 went above 0 here? This just went down about about 30 points. So how do you know that this T3 going down is the same as is not a good buy signal? And the reason is that T5, which is an anchor, is below 0 here. So unless you're playing like a 144 tick chart and you're just going for 2 or 3 points on gold, then you want to stay away from all moves to the upside as long as the anchor is below 0. So you don't. So when you're looking here, you know, how do you know? Hang on 1 second. How do you know that this is also not going to go down like this piece did over here? And the difference is when this goes above 0, T5 is moving its way above 0, and if you need to wait until all of T5 gets above 0, you're sacrificing about about 20 points of this move just to make absolutely sure that you're not going to get stopped out, and you still get about 40 points of the move. So this is almost like a 40 point, I feel really good about it, or you go in here and you're not sure whether it's going to go down or not because of past performances of T3. That's why you always have to use T5 as an anchor. So this whole move from here to here has been above 0, so at least you know that the first piece is going to be okay. So the second piece you really want to stay out of, which was here, and eventually it did go back up. And then when this moves down below 0, that's when you can take it. And that's what we just made the 40 points on, or 20 to 40 points. Okay, you can go down. In some cases I've been using like the 144 tick charts. Okay, that's not a good read. Let's do the 233. Alright, sometimes it's a good read, sometimes it's not. This isn't too bad right here. But in the case of the 230, let's do the 377 and see what happens here. Okay, so let's look at the 377 because I see some patterns that are happening on T3. Okay, so when it goes below 0 here, that's one move there. Bing, bing. Goes below, and this goes above right here. This was Friday just before the close, and that's when we closed out our positions when I saw this moving above 0 right here. So in this case, if you were just playing all these right here, and I didn't play any of these to the upside because it was down on bigger time frame. The T5s were down on the bigger time frames. The anchors on the bigger time frames were down. So I basically ignored this and this to the upside. And it did go up, but it kind of went, flash in the pan sideways. But the bigger chunks were right here, and right here, and then boom. And then, as I say, we covered about 15 minutes before the not the COMEX close, but the aftermarket close. So that is gold. Now, where it's going from here, Not really sure. As I said, if you're looking at, I look at multiple time frames, and then when I see a time frame that I like, I'll just get on the call and say, okay, get in. So I don't see, nothing really sticks out at me right now, because it's very thin trading, and that was a very small time frame. So it looks like it may want to go up a little bit further, maybe to 1230 for right now, just to match the bottom of this right here and the top of this one right here. So 1230 may be a good place. Now, whether it continues to take off, now this is almost above zero now in T1 on the 21-minute Globex price right here. So if it takes off, I won't know until the smaller time frames, like the, for instance, like the 987. As I'm saying, mainly I'm looking at gold on the downside. Timing is absolutely critical. Right now, this is looking, when it crossed right here, that was a sell. When it crossed right here, this is a cover, but not necessarily a sell. I'm definitely not holding over a 3-day weekend after a holiday shortened week, because anything could happen in Greece or Brazil or any other country that's protesting that may lead to gold being safe haven. Now, there are some people who are using it as a safe haven. Most of the people who are buying gold are covering because they're short, so they're covering their shorts. So they're not really they're buying it. It's not voluntary buying. It's buying or lose your or it's buying to cover your short position or lose your account. So I'm not really sure where it's going to go, but I do know that for right now it's going up, and whether it goes here, 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 I have to wait for these waves to give me a signal, especially T1 and T2. All right, let's look at something else here. Let's look at Apple. Let's look at a daily on Apple. Hard to tell. Let me see. T2. T1 went below zero this past week. Okay, so the first sign, this is the first sign of a major sell. And anytime you get the first sign of a major sell, it'll go down for 2 days. For instance, first hash mark, second hash mark, first candle, second candle. It went down, kind of fakes you out down here, and then pops up. And that's the first sign. That's usually indicative of what happens at the first sign of the waves going below zero. It's like, it's when everybody else knows it, like this 7-day move, and then all of a sudden it goes against you, and then it starts moving down. So if we want to look at a smaller time frame here, that was the daily. Let's look at the 377. Okay, 377, this is going to be your anchor. This is up, and this is partially up, above and below zero, and this is down from here. So we look at above here, and we have to match up. Okay, so from this happened too quickly at like 7:30, 8 o'clock in the morning, so you couldn't get in there. This you don't want because T5 is up. So this is a good entry right here. Bing, bing. at 410, and instead of, you can either do the shorter wave or the longer wave, 10, basically 10 to 20, and you've got 10 points out of it in from like 8:30 to 9:13. Okay, on the downside, this is kind of like a quasi up down area, so you can take your chances of buying it on the upside because the dark blue wave is above zero. You would have gotten 6 or 7 points out of it. Okay, you don't play the, but I wouldn't play the downside in this unless it was definitively down, and that didn't happen until this crossed, these crossed here, and this already crossed, but when this was above, it was still above zero. When T5 was above zero and these crossed, bam, that's when you got your 8 to 10 point move on Apple. Okay, that's all I have. Short video tonight. Maybe it's not so short. No? I thought it was going to be short. It's 21 minutes. Okay, enjoy the rest of the holiday weekend, and I will see you at the next update. Again, if you are interested in becoming a client, oh, hang on one second. If you're interested in becoming a client of Triton Wave Consulting, please get in touch with me, tritonwaveguy@gmail.com. I now cover, including gold, I now cover all the major stocks that have high-profile stocks with very active options, and the ES and SPY, and just call, if you're interested, call for rates or email me. Have a great holiday weekend, and I will see you at the next update.